at a discount or at face value. More than 100% is a premium, less than 100% is a discount. You should know your stockholders' equity. What consists, what can we find in stockholders' equity of a balance sheet? What are the things that we find? It's not as simple as page 1052. It's not as simple as page 1052, common stock retained earnings. It's not that simple. We have common stock, we have preferred stock, we have paid-in capital in excess of par value, we have paid-in capital from treasury stock, we have common stock dividends distributable. There's a lot of stuff that goes into the stockholders' equity that we learned in chapter 13. So review the stockholders' equity with multiple accounts. Treasury stock is part of the stockholders' equity. Treasury stock will be part of the stockholders' equity. You need to know and understand what makes up the stockholders' equity on the balance sheet. As I mentioned before, you need to know the operating activities. There'll be question about the operating activity of the statement of cash flows, both on the direct method and the indirect method. There will be specific questions that will ask you direct method, and specific questions that will ask you indirect method for operating activities. On bonds payable, the payment of interest versus the interest expense, you have to know how to compute the payment of interest, and you also should know how to compute the interest expense. They're not the same. They're not the same. Especially if you issue bonds at a premium or a discount. The interest expense is different than the cash paid. Remember what we said about payment of interest. It never changes. The credit to cash is always the same. The credit to cash is always the same. Half of the interest, whatever the interest is for the year, half of it is what you pay every 6 months. That's the credit to cash. But the interest expense can be higher or lower than the cash paid, depending how the bonds were issued. If bonds were issued at a premium, the interest expense is going to be lower than the cash paid. If you issue the bonds at a premium, the interest expense will be less than the cash paid. If you issue the bonds at a discount, the bond interest expense is going to be higher than the cash paid. But the payment of cash doesn't change. The credit to cash is not going to change, whether you issue bonds at premium or discount or par value. I told you that there will be a question on vertical analysis, a question on horizontal analysis, a question on trend analysis. That's chapter 17. That's chapter 17. You have to have an understanding what vertical analysis is, horizontal analysis, trend analysis. You don't have to worry about common size income statement. I left that off the exam. I wasn't sure whether I was going to, but I did. So the common size income statement is not on the exam. It's not on the exam. You should know stock issued, stock outstanding. You should know the difference between stock issued and stock outstanding. financing activities, investing activities. You should know what type of transactions belong under investing activities, what type of transactions go under financing activities. What we did today, you know, those short exercises that we did today, right? Good short exercises to review as to what to do with a particular transaction, add or subtract, investing, financing, operating. How do we measure the ability to collect receivables? How do we measure the ability to collect receivables? That has to do with chapter 17. The ability to collect receivables. How do we measure that? Stock dividend. What the effect of a stock dividend is. Whether it's a large stock dividend, a small stock dividend. What effect do stock dividends have on your statements? Earnings per share. We saw that formula today. Investments in bonds. Investments in bonds. Investment in bonds is investing in debt securities. Investing in bonds is investing in debt securities versus investing in equity security, which would be stocks. So investing in bonds has to do with investment in debt securities. Debt securities are usually held to maturity investments. Available for sale investments. Again, I showed you in chapter 16, I showed you page 900 and page 910. Page 900 and page 910. I'm going to ask you to compute the net cash flow from operating activities. I'm going to ask you to compute the net cash flows from operating activities. Your job is to study both the direct and the indirect way of computing that. But I will ask you, what is the net cash flow from operating activities? But you have to study both direct and indirect because it's different depending on which one I will ask you. Again, on page 910, they give you a summary of what happens with unrealized gains or losses, unrealized gains or losses, unrealized gains or losses. And that, of course, has to do with investments, either trading securities or available for sale securities. The unrealized gains or losses that we discussed applied to trading securities and available for sale securities. Classification of investments. Classification of investment. In other words, based on the facts that I will give you, you have to determine whether the investment is classified as a current asset or a long-term investment. For example, trading securities, investment in trading securities are short-term. But investments in held to maturity, investment in available for sale sometimes can be long-term assets rather than current assets or short-term assets. Investments in stock, so that would be investments in equity securities, investment in equity securities. Treasury stock transactions, you should review those in chapter 13. When you purchase treasury stock, what happens if you sell the treasury stock? You should know how to compute the carrying value of bonds payable. You should know how to compute the carrying value of bonds payable. It depends on whether you have a premium or a discount. So you got to look at the facts, but you should know how to compute the carrying value of bonds payable. If you have a premium situation, if you have a discount situation. I mentioned available for sale, right?
Yes.
Okay. There's another question on available for sale investments. So there's a couple of questions on available for sale investments.
What is the question?
It's question 31. Gave you the question. It's question 31. I mentioned before, you should know the difference between bond interest expense versus interest paid, okay? So you need to understand the difference between the bond interest expense versus the interest paid. The question will either ask you, what's the interest expense? Or it will ask you, what is the interest paid? You should know what to do with a premium on bonds or a discount on bonds. What do you do if you have a premium on bonds account? What do you do if you have the discount on bonds account? What happens to that account? What happens to that account? Whether it's the premium account, premium on bonds, or the discount on bonds. Significant influence. Significant influence. That means 20 to 49% of ownership in the equity stock of another corporation. So there'll be a question on significant influence. And it'll be obvious that it's significant influence. I'm not going to give you 21%. So it'll be obvious that it's significant influence. But it's 20 to 49%. You don't have to worry about controlling interest. I told you that before. You don't have to worry about that type of investment. Prior period adjustments. Prior period adjustment. That's in chapter 13. When you go back to chapter 13, you should understand prior period adjustments. Question on mortgage note payable. A mortgage note payable, that can be found in the early pages of chapter 14.